What's going on out there, good people? This is your boy Look Around from LMD Trading. Coming at you today on this Friday, March, 18th, with another daily trade review. Today was one of those days, man. It was one of those days. Good entries, but it's one of them just don't feel good green days. We only traded one stock today. We only traded AMD. Took 4 trades on it. We were right 50% of the time. That's not the problem. Problem was our execution on getting in and out of these trades. So let's go ahead, take a look at the thumbnail watch list. You know how we do. See what we were actually looking at. And you will see today pretty much all of the big caps. I guess I can't say that. We can look at Apple, Facebook, Microsoft. Those all made pretty nice runs today. NVDA popped off of the open, and then it just consistently went up today. AMD, which is what we traded today, look at how choppy that is. That is real choppy. And then we look at the market, and we see the market just went in a steady uptrend today. These charts here, actually all of these charts have pre-market turned on. So when you see this over here, this is pre-market. Same pre-market. And then, like I said, up here as well. So where you see it kind of flat, that just means that it wasn't really doing anything in pre-market. But like I say, we only traded AMD today, and it should have been a better day. Should have been a much better day. Let's go ahead, pull up Trader View, and you can see we took 4 trades. Closed P&L $59. That is a wowzer, because this here should at least be, I'm going to say, 4 times. Actually, yeah, it should probably be about 4 times what we actually closed out on today. So let's go ahead, get the charts pulled up, and we will take a look at it and see why I say that. All right, so we're looking at the SPY here. And like I said, SPY, just nice. This is how we expect to see it daily, either one way or the other. We expected to see it uptrending, or if it's on a downtrend, we expect to see the downtrend. And even look at over here on the daily, it had been trading in this trend line going down, and we have broken the trend line, and we are up to the 200 moving average. We're coming right up to that 200 moving average. So this here is going to be the moment of truth. Are we going to bust out of the 200 and come back and retest and hold? Or is that 200 going to reject us down and get us back in a downtrend? So next week should be fairly interesting. And the and AMD is setting up kind of interesting as well. But this was AMD's daily chart. This is ugly. This is an ugly chart. But let's look at the daily real quick. I'm gonna bring up the daily blown up big. So see the daily all the way up until November, which is where everything pretty much started going down. And we see that AMD would go down, break over the 20-day, which is this like red looking line, come back down. It tested it. Wicked down move, broke it, and at this point right here, it got into this downtrend. We see it in this downtrend. Broke out of it wicked this week right here. Got back inside of the channel or this downtrend, and it's just been trading in the downtrend. Well, today we see that it is trying to break out, but look at how it closed today. It closed almost getting back in the channel and the high of the day came up right to the 200 moving average. So next week should be interesting. Next week should be interesting. Are we going to see everything push back down, or are we going to see stocks break over the 200 and maybe get out of this little funk that we in? So that's going to be interesting. But let's go ahead and get reviewing these trades so you can see why I am so disappointed in my trading today. All right, we took this first trade at 9:36 and we played puts all day today. Played puts all day today. Let's get this over. And 9:36, where are we at 9:36? 9:36, first trade. Right there. Mindset on this trade, and pretty much all of these trades played out the same way. It was the same thought process. So when you look at this, you're not going to really see a pattern. You're not going to see the usual like patterns that I'm trying to take. But nonetheless, all of these trades turned out to be good trades, mindset right, but they just didn't get executed right. So we got in right here. Thought process is this is coming back down. After this made this, look at the volume on this opening candle. Look at that right there. That volume is just crazy. I'm going to go back. That was the higher day volume on the very first candle of the market. So we got in right here thinking that this is going to come back down. And we got out of our first contract at 9:52. We got out somewhere on this candle. And these contracts, listen to these numbers. Listen to these numbers. We got into these contracts for $41 a piece. $41 a piece. So we paid $82. We got out of this first contract for $82. I'm sorry, for $81. $81. And then the second contract, 7 minutes later, 9:51, somewhere in this candle, probably up here, we got out of that contract for $46. We doubled this contract. So we paid $41 for that contract. We got out at $81. Doubled our money. $40. This contract we got out making $5. Do you see my frustration? And this is just the first trade. So had we got out of both contracts right here, we would have made $82. I'm sorry. Yeah. We would have made $82 on that contract right there, on both of them, is what we would have sold them for, $82. And we would have made total on the trade $82. But we made $45. And that was our first trade. Second trade, again, we're on AMD. This time we get into this trade at 10:05 and 57 seconds. So let's see where 10:05 and 57 seconds is at. That's probably going to be somewhere around there. This one, we're playing the same way that we played that one. We're playing it to push back down again. First contract we get out of, and actually, and I'll give you the numbers on these. We paid 38 cents, or 38 cents multiplied by 100. So we paid $38 per contract. $38. Bought 3 contracts. The first 2 contracts we got out at 10:39 32 seconds. So let's find 1039. 1039. That's that candle right there. We're getting out on this candle right here. And we sold those two contracts for $64 per contract. So we made $26 per contract. So we made about $50. Made about $50 on those two contracts. Then we get out of the last contract at 1056. 1056. This candle right here, probably more like up here in the candle, because we got out of this contract for $38 flat. So first trade of the day, we take that trade, nice move down, make about 50 bucks. We moved the stop on the second one to break even, and we let the trade come all the way back up and stop us out break even. Smarter play would have been to set the stop at 1R. At least get 1R out of that contract. And here it is. We do the same thing on this trade. We sell the two contracts. We make $50 on those two contracts. Move the stop to break even. And we let the trade come all the way back up and stop us out at break even. It's like, ugh. But nonetheless, we were up $97 at that point. We're up $97 at that point. Then we go back to AMD. Because like I said, that was the only one that we traded today. We was fascinated with that. I was just like totally zoned in and not looking at anything else today. But went back to AMD. I did not have this right here turned on. Did not have that turned on, which I want to say is the 20 moving average. Just turned that on a little while ago when I was setting up this chart. I just turned the 20 moving average on. So I was not seeing this on my charts. Otherwise, I would have known we trading right into the 20. But got two contracts right there, 1104. We paid 39 cents per contract, so $39. And we got out of these two contracts 9 minutes later at 11:13. 11:13. Getting out in this candle right here. And we lost $18 on that trade right there. Again, had I seen this 20 moving average coming into play, that possibly could have swayed me from taking that trade. I'm going to say possibly could have swayed me. What really would have swayed me from taking the trade was if I had, and somebody just turned me on to being able to do that, if I had that line right there. If that line right there would have been on the chart, which was a past price action area, we're going to go right there. That's where it really is. So had that line been on the chart, had I been marking my charts as the morning was going on, I would have known that's coming up right there. And actually, I'm not sure why I'm saying that, because this is really what I want to see, because I want this to go back down. But again, came up, slightly pushed back down, went up, look at it, testing that area, pushed back down, and just could not push below this 20 moving average. So this was really what was acting as our resistance to go down. But lost $18 on that trade. No harm, no foul. Let's take our stop, keep it moving. And then we took one more trade. one more trade on AMD. This one was at 11.15. So let's see where 11.15 was. So we basically stopped out there, got back in our next trade. Let me switch this back. There we go. Got back in on the next candle after it's rejecting and pushing back down. And we got out of this trade at 11.22. 11.22, which would have been that candle right there after it came back up and stopped us out. In that trade there, we lost $20 on. Paid 35 cents each, so $35 for those contracts. We sold them back for $25. Losing $10 a contract, $20 total. So ended up giving back $38. We gave back $38 of the profit that we had made, and we gave back even more by letting those additional contracts that we had come all the way back up, stop us out flat. So what I take away from this day was pay attention to the charts more. Pay attention to the charts most definitely, and lock in some profit if you're gonna buy two contracts and try to hold one, because it made no sense to take this trade right here, sell one of the contracts here, because we could have just sold this contract down here, made a little bit more money than we made on that one. We could have let that, because this candle here came down all the way to here, and then it came to right here, and this is where it closed at. So we had all of this opportunity to sell that contract. Then we purchased this contract, and we get out of the first two of them here. Again, we could have got out and made a little extra money as it pushed down. Or smart play is to set the stop right here on VWAP, or maybe just a little above it. That way, if it peekaboos and keeps going, we don't get stopped. But if it peekaboos and stop us out, we still secure those gains. In the same way here, if we're going to do that, get out right here, set the stop on that second contract right above VWAP or wherever your price level line is. And if it peekaboos and stops you, oh well, you made profit. And if it peekaboos and keeps going lower, then you can continue to take that trade. So that's what I got from today. That is what I got from today. And we'll keep this one short, sweet, and simple. If you haven't already, of course, go ahead and hit that like button. You'll hear me ask you to do that every video. Definitely getting the views up, which are good. That is good. But if we can get the likes up, if we can get people to just like it, I think we'll be doing good. And then, of course, if you're not subscribed, please think about subscribing, because like I said, I review my trades daily, try to get it done the same day. I actually went out and played golf this afternoon, and just came back in, and I'm like, let me go ahead and get this video out the way even before I eat dinner. But purpose of these videos is exactly what I'm seeing today. The key is to execute. I've been playing golf for years, and I thought that was one of the hardest things that I can learn to do, play golf. And I must admit, trading, definitely harder, hands down. The mental game. Golf is a wicked mental game, because you're only playing golf against yourself, even if you got other people out there on the golf course with you. At the end of the day, it's you against the golf course. Stock market, same exact thing. It is you against the stock market. And that mental game is just, that's wicked. The finding patterns. I'm decent at finding patterns. I won't go so far as to say that I'm good. I'll say that I'm decent. I am decent at finding patterns. It's just the mental side of, one, executing, pulling the trigger when I see a pattern. Because a lot of times I'll see the pattern, I'll see the entry point, it'll trigger, and then I won't take it right when it triggers. I'll get in a little later than I should have. So that mental thing with trading is just crazy. It is a mind. I'll save that word. My mother watches these videos. So yeah. Well, we're going to wrap this one up. We'll get our mind right to get in the market on Monday, get a little studying out the way. I may even make a few videos this weekend, kind of showing my setup. I've modified it a little bit, as well as some of the watch lists that I use to kind of find my ideas and how I get into my trades. So it's supposed to be a rainy day tomorrow. So I don't think I'll be out in my shop working, out in my embroidery shop. I don't like to work out there if it's going to be raining and lightning and whatnot. So I might come in and try to get a couple of videos done. So if I do, be on the lookout for that. And we will be ready to do it again on Monday. Peace.